set off and carry forward of losses. So let's see the meaning first. Set off. Set off means adjustment of losses against the profits from other source or other head of income in the same assessment year. So you set off certain losses against the income sources. If losses cannot be set off in the same year, then such losses are carried forward to the next assessment year. There are certain rules to set off. If such losses cannot be set off in the assessment year, then they are carried forward up to certain number of years. The maximum period, please remember this, maximum period for which different losses can be carried forward for set off has been provided in the Act. So it's mentioned up to how many years you can set off your income. First one, that is loss from house property. Loss from house property can be set off against income from other house property. For example, you have two houses. You incurred loss from one house and income from other house. So you can set off your loss from one house property to the other house property. Second one, that is it can be set off against other heads of income. That is income from salary, income from business, income from profession, capital gains, and also other sources. So you can set it off against any source of income, carried forward up to 8 assessment years. Loss from house property against any other head of income shall be restricted to 2 lakh. Only amount of 2 lakh for any assessment years. Other head of income refers to, that is income from salary, income from business, capital gains, and other sources. Here only amount up to rupees 2 lakh can be set off. Second one, that is loss from business. There are two types of business, that is speculative business and non-speculative business. Speculative business can be set off only against income from speculative business, if not carried forward up to 4 assessment years. So income from house property was carried forward up to 8 assessment years. Income from speculative business can be carried forward up to 8 assessment years. Second one, that is loss from non-speculative business can be set off against non-speculative business income and speculative business income. So this loss can be set off against both the heads of income, that is speculative business and non-speculative business. If not, other head of income except salary, it can be set off against all the other heads of income like income from house property, capital gains, income from business, and also other sources of income except salary. You cannot set off non-speculative business loss against income from salary. Unabsorbed business loss can be carried forward up to 8 assessment years. This can be set off, that is speculative business can be set off up to 4 assessment years, and non-speculative business can be carried forward up to 8 assessment years. Next one, capital gain. There are two types of capital losses. One is short-term capital loss and second one, that is long-term capital loss. Short-term capital loss can be set off against short-term capital gain and long-term capital gain only. So this short-term capital loss can be set off against short-term capital gain and long-term capital gain, if not carried forward up to 8 assessment years. Long-term capital loss can be set off against LTCG only. So please remember this, long-term capital loss can be set off against long-term capital gain only, if not carried forward up to 8 assessment years. Even short-term capital loss is carried forward up to 8 assessment years, and long-term capital loss is also carried forward up to 8 assessment years. Loss from the activity of owning and maintenance of race horses. So this can be set off against income from owning and maintaining race horses, that is same head, if not carried forward up to 4 assessment years. This can be set off against the same head of income, or else it is carried forward up to 4 assessment years. Loss from lottery, gambling, betting, online games and crossword puzzles. These cannot be set off. Please note that the loss incurring from lottery, gambling, betting, online games, crossword puzzles cannot be set off in any cases. If income is received from lottery gambling, it is considered, but loss is not to be considered. Loss from specified business under section 35 AD can be set off against income from specified business only. Loss from specified business under section 35 AD can be set off against income from specified business only. Please remember this, the same head of income, or else it can be carried forward for indefinite periods. So it's continuously carried forward if it's not settled under the same head of income. Order of set off for losses from business income. Current year's depreciation, current year's capital expenses on scientific research, brought forward business loss, and absorbed depreciation. We will understand this better while solving the sums. Okay, the first question. The income of Mr. A for the assessment year 2025-26 has been computed as under. Loss under the head income from other sources, rupees 14,000. Loss under the head income from house property from a property which is let out, rupees 10,000. So we have two losses now. Profits and gains of a business income, rupees 2,10,000. Long-term capital gain from building, LTCG, 1,50,000. So compute the gross total income. Let's read the question again. Loss under the head income from other sources, rupees 14,000. Loss under the head income from house property from a property which is let out, rupees 10,000. Profits and gains of a business, rupees 2,10,000. Long-term capital gain from building, rupees 1,50,000. Let's look at the solution. Okay, so what incomes do we have now? First one, that is profits and gains of a business. Okay, so we write it down. Profits and gains of a business to be 2,10,000. We also have LTCG 1,50,000 less. We have two more losses there. Loss under the head income from other sources and loss under the head income from house property. So loss under the head income from other sources, that is 14,000. Loss from house property, that is 10,000. So the total is 24,000. We deducted from 3,60,000. So it's 3,36,000. Let's look at next example. Mr. A, age 35 years, submits the following particulars pertaining to the assessment year 2024-25. Compute the total income of Mr. A for the assessment year 2024-25. Income from salary is 4 lakh. Loss from let out property, that is 2,20,000. Business loss 1 lakh. Bank interest received 80,000. So we have income from salary rupees 4 lakhs less loss from house property restricted up to only rupees 2 lakh. Let's look at the question. See, loss from let out property. See, we have income from salary, that is 4 lakh. Loss from let out property. Loss from house property can be set off against any head of income, but the entire amount can be set off against only the income from house property. Since it is set off against the salary, we cannot take the entire amount into consideration. So amount only up to rupees 2 lakh can be deducted. So it's 4 lakh minus 2 lakh, which gives you 2 lakh. So we have the balance of rupees 20,000 from house property that is to be carried forward to the next assessment year. Next, income from other source, that is bank FD received, is rupees 80,000. Yeah, it's written less business loss can be set off to the extent of rupees 80,000. Please remember this. Business loss is set off against income from other sources up to rupees 80,000. So balance of 20,000 is to be carried forward to the next assessment year. So we have our gross total income to be rupees 2 lakh. We do not have any deductions, so we get the total income as rupees 2 lakhs. Capital losses, short-term capital loss, long-term capital loss, I explained you. Okay, let's look at the rules again. A short glance. Loss from house property can be set off against any other house property, any other head of income up to rupees 2 lakhs. Loss from business or profession can be set off against income from any other business or profession or any other head of income except salaries. Please remember this. Loss from business can be set off against any other head of income except salaries. Next, loss from speculation business, that is income from speculative business only. Income from specified business to be set off against the same head of income, that is income from any other specified business. Long-term capital loss to be set off against long-term capital gain. Short-term capital loss, STCL, can be set off against both short-term capital gain as well as long-term capital gain. Loss from activity of owning and maintaining race horses against the same head of income. So income from the activity of owning and maintaining race horses. Loss from lottery, crossword puzzles, gambling, card games or betting cannot be set off against any income. Loss from house property up to 8 years. Loss from business or profession up to 8 years. Loss from speculation up to 4 years. Loss from specified business, no limit is specified, so infinite time period. Short-term capital loss 8 years. Long-term capital loss up to 8 years. Loss from activity of owning and maintaining race horses up to 4 years. Okay, let's look at this problem. Mr. D has the following income for the previous year 2023-24. What is the total income in the hands of Mr. D for the assessment year 2024-25? So income from the activity of owning and maintaining race horses is rupees 75,000. Income from textile business is rupees 85,000. Brought forward textile business loss is 50,000. Brought forward loss from the activity of owning and maintaining the race horses is rupees 96,000. So we have two incomes and two losses. Let's set off this. Income from the activity of owning and maintaining race horses, 75,000. Okay, so we have the same heads of income. One, we have income from these horse races, one is loss. So this loss was incurred in the assessment year 2021 to 22. It can be carried forward up to 4 assessment years. So let's say first assessment year is 2021-22, second assessment year 2022-23, third assessment year is 23-24. So we are calculating this in the assessment year 2023-24. So this can be set off against the head of income. Okay. Then income from textile business, 85,000. Less brought forward textile business loss. We have this rupees 85,000. So let's set it off. We have balance of rupees 35,000. So total income is rupees 35,000. So balance loss of 21,000, that is 96,000 minus 75,000. Okay, so brought forward loss was 96,000. So deduct 75,000. So the balance of 21,000 is to be carried forward to the next assessment year, because you can carry forward it up to 4 assessment years. So we have balance 1 year remaining. So this can be carried forward. These are simple problems. Practice more so that you can understand these problems better, but please know the rules carefully. That's for today's video. Thank you for watching.